Hello everyone and welcome to the Forex technical market update for Friday, November 6, 2015. Okay, we had the non-farm payroll report this morning and it seemed like someone got wind of the numbers beforehand, because for any of you who were paying attention before the number came out, maybe about 10 seconds before or so, we saw a huge spike up in the dollar. I was watching the euro and the Japanese yen, and I saw a huge move up in the value of the dollar before that the number was released. So maybe some hanky panky there or something. Okay, so let's take a look at what has been happening with the US dollar. Remember, we have been saying that the market broke out of this consolidation pattern. It broke out of it last week. We did get a test of resistance, and then the market is now heading back to the downside, as we would expect in a situation like this. Or let me illustrate it with the US dollar index firstly. So we had, this was the trend line. Redraw it, and this redrawing it from some emails we have gotten about drawing the trend lines from scratch. Okay, so this was the trend line. So we were in a consolidation pattern, as you know, and this pattern lasted a number of months. As you can see, the market topped out in March, and ever since March we have been kind of meandering aimlessly within the dollar. Now the market broke out of this consolidation pattern, did come back and test it, and is now trending to the upside. So our Forex income system members should be seeing some acceleration in the value of their portfolios in the next couple of days to weeks as the dollar rally, because we have been positioned for the rally in the dollar so far. Okay, so the next area of resistance is up near this 100 level on the US dollar cash index. Now the market could come up to this level and form a double top type scenario and come back down, or we could punch above this $100 level in the US dollar index. And how does that translate to the euro? We did clear those important support at 108 in the euro. So the next area of support is the low that was made on the year, which is at 104.62 or so. And if we do clear 104.62, then the next area of support could be the parity level with the euro versus the US dollar. So we are definitely keeping an eye out on that. Taking a look at the British pound, the British pound has broken out of a triangular consolidation pattern and is following the broader move in the US dollar to the downside. And we see that the British pound was in a consolidation pattern, and the market has traded below this consolidation pattern, clearing the 151 low. And if we do close below this 151 low, then the next area of support will be all the way down at 146. So the journey down to 146 is over 450 pips from here. So we will definitely we are positioned for an acceleration in the value of the dollar, and we'll be looking to see if the British pound can reach that level in the next couple of days to weeks. Taking a look at the British pound versus the Swiss franc, we did have a decline yesterday, and today a decline started, but we have recovered somewhat. Let me just take a look at the forward chart. You see that the market has recovered after the non-farm payroll report, and we could challenge this high again that was made in the British pound Swiss franc of 153.52. Taking a look at the Canadian dollar is clearing resistance up at the 132.72, and we could be returning to the high of 134.57. The trend in the Canadian dollar remains to the upside. The Australian dollar weak again. The market did recover slightly in the 74 level, and we have and the market, the 74 level turned around the market, and we are currently at 70.46 in the Australian dollar. Another market that was in a slight triangular consolidation pattern was the Japanese yen, and we see that the yen broke out of the triangle, the upper portion of the triangle, as you can see here, came back down, tested support, and is now rallying. So the next area of resistance in the yen is all the way at this swing high here and the 125 region. We're currently at 122.89, so that is some 210 pips or so, 210 211 pips from here. Gold, I've been saying that gold is very bearish. We got a sell signal in the gold, and the market has followed through with that sell signal. So gold is definitely bearish. There is a 1080 low, a low near 1070, 1080. If the market does clear that level, then we could be in for $1,000 gold in the next couple of weeks or early next year. Okay, so the markets are essentially going according to what our analysis stated, and now is definitely the time to be reaping the rewards from the analysis. If you'd like to take advantage of our signals, and we will be definitely trying to make some very good gains out of these markets, you can click on the link below this video to get started. Okay, today is Friday, and it's the end of the week, and we're coming up in the last quarter. Remember, I said that the last quarter is normally the last quarter and the first quarter of next year of the year are normally very strong quarters. You normally get fairly good trends in the markets, and that's what seems to be playing out at this point in time. So this is definitely a good time to get involved in the markets, get involved with learning how the markets move, and really up your knowledge in the markets if you want to make next year a better year for yourself in terms of your trading. Thank you very much for listening. Remember, to get the signals, click on the link below this video, and I will see you next week. Thank you.